Yep. Hopefully everyone can hear me properly. All right. So looking at NASDAQ as usual, I sent out the bias in the bias chat. Looking a bit more for bullish price action today. On a higher time frame perspective, on a 4-hour chart, I was anticipating that Tuesday was going to be the high of the week. Doesn't look like that's playing in. So saying flexible as usual. We had SMT at the weekly low, the current weekly low, as well as the previous weekly low with ES, that kind of run down and that spike down, which met all the targets we were looking for yesterday. But also notice the fact that we weren't leaving any breakaway gaps. Fill the gap there, we dropped down and we just wick back up. And between this high and this low, there were no inefficiencies being left open. And that should be a telltale sign to you to show you that it's not willing to move towards one side of price action, especially if that's towards your bias. So lack of breakaway gaps, we have this 4-hour inefficiency I've marked out that's obviously being bounced through and then traded through eventually. Comes back, touches the order block. We have on the 1-hour chart, this reclaimed inefficiency in discount here, which price had tapped into at 7 a.m. And then coming into 9 a.m., we dropped and took out these swing lows and formed a short-term SMT there. So I'm anticipating this to be the low of the session. So I said in the predictions chat, right in there, I prefer if this is the low of the retracement for bullish PA, still letting some of the opening range play out. So as we had these kind of relatively equal lows coming into the session, and obviously this discount PD array, the reclaimed gap, that's what I'm looking for to see how we want to react off of. So drops into discount, sweeps liquidity at a key time, evidence for possible soup. As it's dropping down, running those stops is likely to purge and revert. Still want to see how it reacts to, there's some 5-minute gaps in here that we have to get through. This one is the main one that I'm looking at. If we can treat these as inversions, that's great. So we want to be seeing how it reacts to this. Preferably leaving this bottom one as a breakaway gap and such. But target wise, we have the ERL here from Tuesday's PM session, as well as the AM session ERL up there. And then, fib projection targets would put us a little bit higher. Take a whole measured move of this. So yeah, still pointing around up to that buy side. Or up to 23,238. So we still have some room to run on the upside. And I'm just watching it for now. I don't think I'm going to take any demo trades on stream today unless it offers me a really good macro setup. But this is the importance of staying flexible to price action, meaning coming into the week, I had one expectation of price. Obviously worked out for Monday, worked out for Tuesday, worked out for Wednesday, and now coming into Thursday, doesn't seem like that analysis is correct anymore. So I'm not going to keep pushing that. I'm not going to come into the day and say, oh, it has to be bearish, and then argue for that and not kind of look at the bullish side when it may be obviously pointing towards the fact that, okay, it looks like it wants to actually be some nice bullish price action. So that's the importance of coming in every day and just not having any weighted expectations, just walking into each day and looking at price action for what it is. You see, by the way, if this candle closes back green here, up here, we're going to go for that high. This kind of wick down, filling all that inefficiencies, and it comes back and prints green. We're not going to go for just this. We're going to go for that. I mean, you could look at time of day as well, right? We're targeting 10:30 on the dot and further. So this partial right here, this swing high on ES, I think it's a kind of a no-brainer partial. I think I'm more looking for 23,180 and then the buy side and actually past that, especially since we have this last manipulation leg now. Boom. -2 right on the dot of 23, 2024. So screenshotting this, put in predictions. If I get filled out, either as a stop loss or as a take profit, I'll show you the execution of the stake I'm currently in, but it's based off the logic down here. Got in, I got stop filled just because of poor stop management. I trimmed it a little bit too quickly, so just re-entered on the 940 candle. But I'm shooting for this and then this. Yeah, I could take a partial on the swing high, but I mean, based on the price action we saw, yeah, no, we should be fine. I'm fine with that. So we got macro time here. We got this inversion for value gap on the 5-minute chart. Price is obviously trading through. There's a little 5-minute gap there too. Inefficiency wise, I mean, you got a tiny one that's going to form right here. So I'd be watching this first. Pair with the order block at 947. It's my main attention grabber. I like if these can be left open as breakaway gaps. And you can kind of see the disparity in price action between even today and Tuesday, Wednesday. You see now the price action on Tuesday, Wednesday makes more sense. Not leaving breakaway gaps on the way down, kind of those deeper retracements, filling inefficiencies, creating that high resistance liquidity run signatures. Right, you go back to the 5-minute, look at the sessions there. You know, we talked about how we weren't leaving those breakaway gaps, these deeper retracements, running the stops, then coming back down, then trading all the way through that, right? For bearish, for the lows of the week and further down, we're not going to see this kind of PA, especially around 50% to 75% of the range. It's going to keep going. Same thing we saw over here, right? Leaving that, filling that. And now you can see this all kind of makes more sense. If we're, at least to me, it makes more sense as to why we weren't dropping aggressively and why I wasn't able to get a large run out of those days, is because of the fact that if the week was in fact bullish and we see this as a Wednesday low of week, now we're starting to see the weekly direction, the daily direction, the session direction, all are pointing in line together. You know, earlier in the week may be pointing this way, and then the day was pointing this way, the session was pointing this way. And you can see when this kind of locking mechanism happens, it's going to be harder PA to trade. It won't be impossible. Still was green yesterday, Tuesday. I was either break even or what was Tuesday? I don't even remember Tuesday's price action. I'm going to do, but I don't remember the trade I took. You know, so now you can start to see it's leaving breakaway gaps. It's quickly filling these inversion for value gaps. It's not causing these deep retracements, these run-on stops that we were seeing yesterday and on Tuesday. So to me, I'm pretty confident it should go for. I'd love to see it go for the current weekly high, which is this buy side up here at 23, 2022. Or 222, I mean. So it should, I'd like to see it rip through that swing high, and you can look for kind of speed bumps in the way. You don't see a lot of speed bumps. You got this gap we've been trading through, but this is more of a breakaway gap, and even that This is more balanced than the other ones. So see, it probably could run through here. If it wants to run through there aggressively, there. Then you got liquidity, liquidity, liquidity. There's no speed bumps. These are still premium arrays, and you can see that slight retracements off of it, but it's not going to be... The PM session high is really the one that could cause a deeper retracement. So if it runs through here and closes through there, it's going to go for there pretty quickly. So similar to kind of the price action we're seeing in here. And I'd actually love to see if there's a gap that forms right in here. And then now you have a low, high, lower, low with an efficiency, especially on a 5-minute chart. Could be buying up in here and actually targeting that high, buying within the breaker before the breaker is formed. But that'd be kind of my last entry opportunity as we're still in discount of that range. After that, not much more I would want to pyramid in. So 5-minute gap over here too. So did it run the stops there? Can't tell. I think you just put in relatively equal highs. What is that? 23, 158.5. Yeah, so relatively equal highs soon. Put in there. But I like to see these left open as breakaway gaps. Nice first presentation being used as inversion there. We got plenty of PD rays within this range in here that should be holding price up from the 5-minute and the 1-minute perspective. Tiny, tiny gap fill there during the macro time. Yeah, I'm not going to take any demo trades, I don't think, today. Unless it gives me a crazy silver bullet, but... just want to read it. But plenty of opportunities this week to study soup, to study run-on stops, and how that gives an entry point. You had a nice one on even counter weekly bias, right? Tuesday, Wednesday, both were bearish price action days compared to what we're starting to see as a weekly bullish profile. That doesn't mean that those days aren't going to work. Just means that it's going to be a bit higher resistance. So Tuesday, Wednesday, now today, Thursday, all offering 9:30 run-on stops. You're not going to see that pretty often, where 9:30 is going to offer this low of the session or high of the session every single day of the week. It's very rare does it do that. So if you wanted to study that kind of entry model, this week is fantastic for that. You have plenty of opportunities to come in and study run-on stops forming the high of the day, both on Tuesday, Wednesday, and now here you see the low of the session, not the low of the day. What characteristics are similar between those two? What's going on here that isn't going on Tuesday, Wednesday, and vice versa? Is there any specific PD array or signature that can be used together with this, where someone's getting a really, really good entry down here, in here? How does someone see that compared to waiting for this fair value gap entry? How can you capture this? I talked about this in the Vantix model lecture, which is a model that we released in the private group. But a little snippet from that is, in order for buy programs or sell programs or any move to start, any expansion to start, there has to be one thing that triggers that momentum, which is going to be some sort of disruption in order flow. And that disruption in order flow is normally going to be a run on stops. Now, that run on stops is really the only requirement for it to start to spool, meaning it's not always going to form a fair value gap. Or I mean, it should, but it shouldn't. It's not going to always offer you a breaker entry. You know, it's not going to always offer you a fair value gap entry. It's not going to always offer you an order block entry sometimes. Although it should, in very high quality price action, especially when it's expanding for a great deal, you'll see all those, you know, SMR, first entry, second entry, third entry, whatever, you know. But the absolute minimum is this run on stops. So that means that this run on stops is going to be there almost all the time. Every time. To be not almost, every time it's going to be there. During macro times, during session times, during weekly times, daily times. So if you can look for those run on stops and you build an entry model around that, now you have another way of getting in. And for me personally, I've got about 4 entry methods, which would be soup, taking a SysD on a lower time frame, and then retracement, basically just a 50% gap, and then I have a unicorn entry. And those are the ones that I favor. These two are going to be the most universal, and you can see them basically any time frame. These ones are also pretty universal, but require a bit more patience and high quality setups to be forming within that range. So I really encourage you to go back and look at this and why at 936 I'm looking for this to be the low of the session. Because if you can capitalize that, even if it's once a week or once a month, what that can do for your P&L. Because a high quality trade like that can offer you 8 plus, 10 plus R. You know, and if your monthly goal is 20 R or whatever, and you're taking one setup, then I'll offer you half of that, and it's not going to be terrible to understand. Key time, key price, SMT. That's your souping model. Key time, key price, SMT. You can see right in here, we got that fair value gap starting to form, the pre-fire of doom. Nice little run on stops. Now we're forming that fair value gap. I did pyramid in on this candle here as we were forming this breaker, so I'll show you that entry when it's finished. But target here about most of my contracts off there, actually, to be honest. I'm tempted to just push it up to 23, 222, but I think I'll just get most of mine filled here. Yeah, that's probably fine. Praying for no discount retracement today. Yeah, I'm with you there. Now it makes sense as to why we got those deep retracements on Tuesday, Wednesday, right, Ty? If it's counter bias, you see those breakaway gaps not being left open. Breakaway gaps are like such a good sign for, you know, strong biases. You're always going to say that. Yeah, now Tuesday, I was saying it earlier in the stream, Tuesday, Wednesday makes more sense. You don't see those breakaway gaps being left open, number one. You see the high resistance liquidity signature, number two, being made more sense. And this is why you shouldn't have any attachment to being right or wrong, nor any attachment to a weekly profile on Monday, Tuesday, you know, even on Wednesday. At this point, I'm looking for bullish price action all the way through Friday. Now, that doesn't mean that I'm going to buy it here and hold it till Friday close, but meaning if it's a Wednesday low week, and especially if we have fib rejection targets that are higher up, that's when you see normally Friday is going to follow through, at least until London close, and then it can do a TGIF maybe in the PM session. A beautiful entry opportunity in here too. You can come down and fill this gap, but we got that gap forming right where we wanted it to. And that's one of those things where I mentioned it yesterday, just you see price action enough, you can anticipate those PD arrays. I'm nothing like, I'm not calling breakers 2 days in advance, but anticipating where price action is going to speed through and then seeing, okay, that's exactly what I wanted, shows me that price is strong. It's showing me strength. It's showing me willingness to repeat the signatures that are there on a high quality day. And as we know, we're looking for 10:30 to 11 o'clock to form that high of the session for our open low high close. So we're still 10:04, really early in time. We're close to that draw. This is a draw on liquidity, a DOL. This is also a DOL. Sometimes we get too attached to a certain line being the DOL. You think that sometimes the draw on liquidity. And as soon as it's getting close to that, you start freaking out. Or as soon as it runs that, you start freaking out and thinking, oh, it's done expanding. And sometimes that's going to be true. But I don't know how far it's going to go. I rely on time mostly for that. If it wants to hover around here for 25 minutes and then right at 10:30 tags that high, then it's probably the DOL. But given the fact that it's close proximity to this and the time of the day and the fact that the weekly, the daily, the session now should be lining up, this is a DOL. I don't think this is going to be the DOL. I think it's going to continue past this. That's why we can start to look for higher and higher targets. And I'm not taking 100% off here, taking about 80%, maybe like 75% off there. Just if I get it down here, so I want to take something off at ERL. If you wanna, we can talk now. Hey, Flux question: How did you know the midnight open will not get tagged? Seems like it was so close, and yet you went long. Where's the midnight open? Oh, right here. How come I can't see it? There we go. Is this the one from today? Yeah. It didn't. I don't know how to describe it. I mean, it doesn't need to go down there. I think the more important question to ask is, why would it need to? Right? If the only reason it needs to, if we were looking for midnight open to be tagged, which that's a good question. It's a good question. If it'd be the only reason for it to need to be tagged is that you want it to be in discount, that's not going to be a good enough requirement, if that makes sense. Meaning, midnight opening price is the opening price. You're not going to see it perfectly drop below midnight opening price every single day. And this is why you can't pattern price action. In this specific daily profile, you see price action almost similar to this. You don't really see any open low below the midnight opening price. You do see it when you look at 1800. 1800 is right here. You see this low, forms SMT on the PM session low, now starting to expand up. So the main question we got to ask ourselves is, why would it need to go down to midnight opening price? If, in fact, we have a 1 hour fair value gap, we have a 1 hour order block right in here, we have a run on stops at 9:30. If all those things are playing in, why does it need to come back down to midnight open? Which now you look at midnight open down here, that's already below the gap. It's almost digging into mean threshold now, this order block. So if it was to come all the way back down into this, I'd be more worried of the fact that now it's going to go start running these stops and potentially come back into here and start consolidating than for us to be up here, right? So the PD rays that are layered above the midnight opening price make it so it's not likely to reach down below midnight opening price. And it doesn't need to do that all the time. That's why my own personal analysis, I'm not going to say for me to go long, it needs to be below midnight opening price. I'm not a day trader. I'm more of a scalper, I guess, technically. By the way, I just take session moves and daily moves. At a session level, I would love if I'm going long below the 9:30 opening price. That's kind of the opening price of that range. So I would love to go long below the 9:30 open, but that's not a requirement for me, where if I'm going long, it doesn't need to be below that. It's more of those kind of, I think I explained this to someone yesterday. It's more of one of those secondary or tertiary confluences where if I say, oh, I got this, and it's below midnight and it's below 9:30, it just builds into it, but it's not a make or break. It's not like a primary thing of me saying, oh, we're not here, so I can't take an entry. Hopefully that makes sense. When you pyramid into existing positions, do you wait for internal SMT? No, not all the time. Most times I'm not. On my original size, if I haven't gotten in yet, then I'll wait for that internal SMT. But on my pyramiding in, I'm literally just buying on whatever. To be completely honest, I'm just buying it on whatever bullish PD array or bearish PD array that looks good to me. Most of my chunk of my position is at the bottom. So then as I'm building it up, I'm building it, you're pyramiding it. So majority of it is at the bottom, and I'm just layering smaller and smaller positions up. So it's only going to move my DCA up a little bit. So realistically, whatever bullish PD rate's going to offer me in discount, I'm going to take that. So I think on this one, I got in on this 943 candle as it's coming down and immediate rebalance this on the breaker there. And then another one on the fair value gap entry at 955 there. Right. Yeah, it's best longs would be below, and that's true. That's not false. That is 100% true. You want to see the best buys will be happening below midnight open. But he's saying that from an entire daily perspective. He's saying if you wanted to get the low of the day, it's going to be below midnight open. If you want to get high of the day, it's going to be above midnight open. So that's true. But in practical terms, it's not going to be there every single time you come to the charts at 9:30, we're getting the low of the day. That's the main point for me, where it's not going to be as important compared to if I were to use something like an open, it would be the 9:30 open. Because now you can start to see a lot of times the best longs or the best shorts for the session is going to happen around that 9:30 open, right? You can go back to Tuesday, Wednesday over here, and you can see that same exact thing. But sometimes it's only one candle, right? Best longs would be above 9:30 open. This would be another turtle soup opportunity. So if you're just using that as a whole requirement, you may not get an entry meeting those requirements every single time. That's why I don't use it. 10-11, another fair value gap right in here. 5-minute order block too. This is stupid, but I need confirmation. If I turn my computer off, will Top Step X close my position still? No, it won't. You got to manually do it. Otherwise, no one would be able to hold swing trades. Right? Yeah, you got to manually, and you also got to make sure that you're manually closing out your limits. So if you're going long, and you have a limit order at the buy side, and then you get stopped out, that limit order will still be resting there. So anytime I'm on a trading platform, as soon as I get filled out, stop loss or take profit, I click that cancel all button like 4 times. Just click it a couple times, and then scroll around on the chart, make sure there's no limit orders resting there. Otherwise, you're going to leave the chart. 3 hours later, you're going to hear a limit order fill off of, a random price action, and then you're trying to get out of that. So yeah, it won't close it out for you. So you do have to manually do it, which is both a benefit and maybe a hassle if, yeah, you just got to be careful. So little retracement here, back to run that short-term low. Notice how it actually just went for the short-term low, not the intermediate-term low. So I'm watching this right now. I'd love for it to keep that intact. If it doesn't want to tag the 955 low, that'd be best. That'd be an intermediate-term low. Why is it lagging out? So now you have this 5-minute SISD up here. Probably even a 15-minute SISD. Yeah, 15-minute SISD. So it's just hovering around that right now. No huge problem at all. Still looking for targets up there, up there. So it's going to so it came down, swept the short-term low there. Intermediate term low still being left intact. And now it, best case scenario is it uses these gaps here. These are not inversion fair value gaps. These are what's called reclaimed bises. This one and this one both are the same. This one actually is even more inefficient. So actually this is real reclaimed bisi. So it's going to have to kind of work through it a little bit. But as it trades through the premium end here, that's when you want to start to use it as a bisi again. Go back to a 15-second chart and just kind of watch the PA in here. So it's coming back down and touching this IPG. It's more likely now that it may run this stop than I-55 swing low. Got to be careful now about that. Because you could see this potentially as a shift. I mean, you can look for discount PD raise. You have this one in here, your value gap, and then you got the order block in here. So that's like kind of your last line of, at least for me, that's my last line of defense for bullish PA. Don't really want it to come back below the 948 swing low, or the 947 swing low, I guess. Still holding the 955 low, which is nice. Right in there. It looks like it wants it though, just based on, yeah. So that you could look at that as a market structure shift. Now, the way if we wick it and close back above here, then I'm fine with it. But we do have to be careful around. Now, I've noticed the lack of displacement going on here, so it doesn't look too bad. But what I need to see now is a run above this open at 1013. It's not going to get that. It may come back for this gap. You got a 5-minute gap there too. I mean, it is digging to a 5-minute gap here as well. So the reaction off of this is going to be indicative of the rest of the session. All right, Ty, take care. Yeah, hopefully PA flips back up. Mm-hmm. Oops. Mm-hmm. Yeah, it's still hovering around this where it makes me look like it's gonna wants discount. That 5-minute bisi right there. Not discount, but I mean actually, eh. Last little gap right there. Gap in the order block. This is kind of last line of defense. I got my stop trimmed to there. Mean threshold of this order block. Clean some of this up actually. So 947. 947. 47 mean threshold is my this is the price action we saw yesterday, right? Draw on liquidity, ERL, really, really close. It was like the London low yesterday. Got pretty close to it, formed this relative equal high, and then comes back for discount. Scaled in on the 15-minute mitigation ES. Let's look at that. Oh yeah, I like that. With the gap too, beautiful. Just a little bit weaker on NASDAQ, it looks like. So it came right next to my stop. My stop was right at mean threshold of this right here. One tick below mean threshold, so it's at 23, 123.5. Correct, Maddie, yep. Maddie asks, does this lack of displacement and the failure to take those key highs suggest that this is a retracement, not a reversal? That's the way I'm looking at it. I could be wrong, but it's showing a bit more strength than, right, this, especially this here. Look at that. Wick. Comes down quickly, shoots back up. Making a second chart. You gotta change the state delivery would be really off here. Got a volume bounce. So I'm looking at that. You could also use this candle body, that's fine too, but displacement through here. Change the state delivery. But you still got no bisis forming, no displacement yet, no breakaway gaps or balanced price ranges. So it's still hovering around. See? And there's my stop. I'm gonna see if it gives me another one. I'm not too convinced it's bearish. I want to see if it gives me another entry here. Perfectly fine with that. I actually may take it on. Let's take it on demo too. I mean, it's a point of invalidation for me. But it may just be a wick out and then it comes back. No, I mean, I don't like the fact that it's coming this far down, but retracement kind of indication in here. Swing high, right? So I want to see if it gives me another one coming into 1030, especially if I can get this kind of market maker buy model going in here. Oh, the 15-minute gap. 15-minute gap too. Oh, actually, on ES it's a bit better. Yeah. Which even in here is dropping below 940. It's already in discount. Wasn't need to go down there for. But yeah, I'm not sold it's going to form the low. Form a new low, I mean. I'm still pretty confident this is going to be the low of the session. Mark this out, I guess. I just want to see how it reacts to this. If we can get a SysD, now we got a SysD here. I just want to watch it. But notice how on this little rundown, it didn't have any bounce price range it formed. It just kind of stayed around it. Then it dropped again. Now we have a tiny one forming here. So I'm looking for that. I'm looking for more of like this. Right in here. Any short-term SMT? No. YM chart is disgusting. Okay. So holding bullish PD right there. Clean some of this up. Oops. Rally up there and discount. I would have loved if there's SMT there, but it doesn't look like it. Yeah, no. See all this smooth. All that smooth. Yeah, if that, I think that's, you can come down and give me the gap, but touches the gap. Looks fine to me. I'll take it up to here. So we got the SysD inefficiency in here. Fair value gap. Higher time frame PD would be the 5-minute gap down in discount. All this low resistance, obviously back up to that swing high. And then, I mean, I could still target up there, but just gonna watch it for now. But that's my still expecting higher prices. Starting to get some displacement here on the 1-minute chart. Stop is at a point of invalidation. We got this order block being protected, and obviously on a lower time frame chart, 15-second chart, this would be a bullish order block. Should have no reason to come back down into this gap, especially with the change of state delivery there and respective fair value gaps being on the way up. So I want to see it run up to this high. This would be a short-term target. I mean, at least for this market maker buy model. So it should run up energetically to that swing high. Got some inefficiencies in there, so it can bounce a little bit back to discount of a dealing range and then go back up for that high. But if it gives me, actually, I'll pyramid in one time just for practice. If it gives me one more, thank you. So in pyramid there will be below discount of the range. This is dropping back into the discount. We also have a propulsion block there. So bullish order block supported and approaching this down closing candle range that I'm trading as a sisti as well. So as it's running back down into that, and you can see the nice reaction we're getting off the propulsion block. So at this point, that's definitely a more advanced. I'm using more advanced stuff in here, but this is the way that I trade. Probably not explaining it as well as I should be, but the main thing you got to look at is you're to study this breaker, and then fair value gap right in here. That's the main thing you got to study. Okay. Other stuff is all fancy. You don't need it. So you can see the energetic run up inside of this. That's looking good. It should take now this swing high. That'd be your first. You know, if I was looking at this fractal market maker buy model as a pyramid opportunity, that would be all that I would need. You know, just from here, scalping it from here, just to that swing high, maybe the premium gap right there, and then you're done. That's how you would scalp it on a day like today. But we're still looking for the highs, so I'm pretty reasonable for putting. I think I'm still looking for it to do that. I want to see if it's 10:30 also, so new time of day. I want to see if it can give me if they can give me that run up to that swing high. The 5-minute chart still looks pretty healthy, right? You look at the 5-minute, you see the bullish order block, fair value gap drops into discount, displaces through. I think it still looks pretty fine. Pretty fine. Yeah, good grammar. Here you have the first stage of a reaccumulation. Inside 50% of that implied market maker model from target to low end of the dealing range. You as well. Will there be on this price action? Most likely, yeah. I'll post it later today. No stream tomorrow, no stream Saturday. But yeah, we could do a market review today, and then Sunday, a Q&A. Sound good? So it's spiking up now towards this swing high and the inefficiency there. That's kind of that refined target. You can see it drop back to discount if it wants to. Come back, maybe immediate rebalance here. But it should start to go, right? Time of day is now on side. So time of day. So I said earlier, right? I was like, I'm not convinced this is bearish. It just may have been I placed my stop a bit too tight. I don't think it was, well, to be honest, still a point of invalidation for me for longs. Just barely got wicked out there, and immediately after it tagged my stop, it's still showing me it wants to be bullish. So I just read it wrong, you know, and Maddie was right. It was actually a retracement stage of delivery. So it's going to go back into discount. See actually how quickly it's wanted to run up there. So this would be your new session target. This would be session target right here. Right up here, this becomes your session target. Session target. Now this could be your daily target number 1. This ELRL we have marked out. Where the heck did it go? There we go. This is a PM session ELRL. This can be daily target / session target that meets both those requirements. And then up here could be a daily target as well. This is nothing less than a daily target. It won't be session target. There we go. Jam that to break even. Shouldn't be coming back down for that anymore. Seen this so many times. Price takes the first obvious liquidity pool on the opposing side of range equilibrium, then takes off. Yeah. Pretty textbook, right? It's just, I wish if there was freaking another gap there. Or a swing high would have came back as like teased us, and then it comes back down. Shoots back up. So there's your session target tagged post 10:30, as you love to see. Time dynamics. Beautiful. It's going to give me that fill there. Man. Would have been a perfect. God, I can't believe. I'm trying to think is like, I had it, got in here. I trimmed it to first this breakaway gap. Then as we formed the gap in here and took the 955, or we dropped into here, I trimmed it down to this gap. Then I was like, okay, realistically, this order block should be supported. It was in discount of the dealing range. It's right on discount. I mean, I guess technically it wasn't. So I mean, I in hindsight, maybe I could have left it down to 942. Same thing happened yesterday. I got stopped out because I trimmed it too tight, and then it ran to my target. I mean, yesterday it ran to my target like an hour later, so I'm not really too pissed about that. I say pissed, but it's just like I'm learning. So I'm like, okay, should I left it down on the breakaway gap? I still think, to me, a trim there makes sense. Even a trim to here makes sense, and that's why I was saying if it were to take out this, you got to be careful of it being a market structure shift, but you never got displacement through. So I don't know. I'm fine with it. I mean, that's why I'm still in this long, pretty comfortable. I think it was just a stop out. I was going to go back to my take profit, and I that's also the thing that comes with the experience, most likely. You know, sometimes you're not taking a second setup. Sometimes I'm fine with taking a second setup. Why is that? Really, it's just obviously price action is going to tell you, but I think it's just confidence in the setup and being able to read it properly. You know, like yesterday, I had not taken a second trade, but then today, it does reach back into discount. I'm still comfortable with it. Why is that? Weekly, daily sessions still online, causing this high resistance retracement back down into discount with a 5-minute gap. ES, NASDAQ both look strong. Original consolidation right below a higher time frame PD array. I think that was pretty classic market maker buy them all being printed in. That's what I was kind of pointing out a couple minutes ago. So we'll see it. But at this point, it should go back for that swing high. Go run up to the swing high. Next couple candles. Yeah, this candle right here. Got the order block. Yeah, this candle still, I'd like it to take the high. Next one, next couple too. But stop shouldn't be touched. You know, we're gonna run that swing high. We got this point. You can't really see it here, but you have what? You have a low, high, lower low that tagged into a 5-minute gap, and then you may have a gap that's forming on top of this range inside of the -1 to -1.5. So you could potentially see it still spike up. I still like that negative too. That's why I might take profit up there. That'd be kind of like your mitigation entry, right? 5-minute chart. You still need a gap to print in there. You do have that swing high too at 1145. So I should pierce both of them. The reason I'm not putting element order there is this is the time-based liquidity. That's where I want it. 23, 180 even. Yeah. Could pyramid in one more here. Yeah. Bro, that's what I said. I said YM looks terrible. Absolute nasty. I mean, look at this. It's even dropping back into discount here. Really? Got within what, a tick? What is it? 23. One, yeah, literally a tick to the take profit. Well, there's your session target ran out. Forms a new session high. Still waiting for that daily high. Tell me what you want now. Still a little lethargic. Like I could pyramid in here if I wanted to, but it's a little bit too far in premium at this point. Where if it were to run up this swing high and what if it were to, whatever reason, do another drop back down, you know, little scalp like 14 points off the limit. Yeah, like this is a free buy. I say free. It's not free, but boring PA, man. It wasn't too bad today, but it's kind of slow. Got that energetic run up at 9:40 to 10 o'clock, and then it stalls out. Macro time has been kind of bad, but is that expected? Yeah. Right. What time of 8:30 news days? I talked about this yesterday. 8:30 news days. What's the time of day you'd like to find an entry between the times of 9:30 and 10:10? Sometimes the macro time can be the retracement as seen here, or the macro time can be the end of the move. So that's why I'm on 8:30 news days. In the beginning, back in 2024 and even early in 2023, I started to look for 9:30 entries on those days. And a lot of times you're still going to get those breaker entries, retracement entries. It's not going to break the model. It's just going to be a little bit earlier than you're used to if you trade the macro time normally. But I encourage you on each of these days to study kind of how entry times are used. So 8:30 news days, you want to be studying the times of 9:30 to 10:10 for entries. Non-news days, you want to be just studying mostly the macros, preferably the 9:50 and 10:50 macros. And then on 10 a.m. news days, you want to be studying the silver bullet. Studying, meaning there's most likely going to be an easy, high quality entry within these time windows that are replicable. And it can be replicated. So that's the ones you want to be looking for. Here comes the swing high, or maybe not. Maybe it's going to be a tick below. Wow, it actually is. That's crazy. Just doesn't like us today, huh? It'll go. I'm kidding. It'll go. Here it comes. Bang. Bro, are you kidding me? Thank you. Please. Please. This is funny. Quintuple highs, I know, right? See, this to me is something out like this to me is like, okay, it's algorithmic. It can't just be price. It can't just be liquidity, right? If it was just liquidity and just price, it would have gone here, would have gone here, would have gone here, would have gone here. It's waiting for time. It's waiting for the time of day that is right to be tagging that. I think we did tag it actually on M&Q. It looks like on M&Q we tagged it. Let me pull up M&Q on the other screen. M&Q. Did we run it out there? Looks like we did. It's high 23,180. Yeah, we tagged. Oh, on M&Q we tagged a buy tick, but who cares? And when this is ran out, I'm gonna trim my stop to. Actually, I can actually trim my stop to here. But when this is ran out, I'll trim it to there. Yeah, 1050 macro soon. Exactly. The fractal tease of doom comes up close, comes up again. Man, oh man. Just want to get filled out. You just hop off the charts. I can't leave the charts while I have limit orders on. So I'm waiting for this limit order to go, and then I can trim this, and then I'll leave it for the rest of the day. I'm not waiting for this one. I just want this one to go, and then I can be done. Do we have SMT or something? We do, but we just need ES to pop up. Just for a little bit. DXY also needs to come back down. We just got this decoupling right now, so that's why it's stalling out. YM is going down, ES is kind of consolidating, DXY is also consolidating, and also not inversely correlated. NASDAQ is the only one that's trying to push up to here, so it's like fighting against the wind. Here we go. Thank the Lord. Not enough buyers. Yep. Not enough buyers. Right in here. In here. In here. In here. In here. It's the buyers. All right, I'll picture my stop now. Where did I say it? Here? Yeah. Bang, bang. Steph Curry. No, I'm just kidding. So there's your execution for the week. I said I wasn't gonna demo trade, but it's a little bit too good not to take. I do want to see it continue through this swing high. I don't want it to just stop here. So start to spool. I was mentioned very early in the stream that you look at between the PM session high and here, very low resistance liquidity. So we got that swing high, and then it's pretty smooth all the way up. But if DXY is consolidating, if ES and NASDAQ or EFs and YM are still being the slow child to catch up in the race, then this is Six Sister, by the way. This is where you see ES and NASDAQ. This is a great example of Six Sister, where NASDAQ is taking the highs, now ES is to catch up. A lot of times you're going to see that as SMT, when in reality it's just trying to catch up to that swing high. But if you draw it out, it makes sense, right? If you were to have this compared to this, which one is going to take its buy side first? Well, obviously the one that formed the SMT at the bottom is the stronger asset. So we're going to see that buy side ran out first. But if you don't have the narrative, that's going to look like SMT, right? As it's getting, but in reality, it's still, this lagger is just going to still take the high. It's just going to be a little bit further behind. That's Six Sister. SMT is what you see at the bottom there. And the difference is narrative and bias. And understanding how that those PD arrays that should be there are going to hold price up. So, but I think, I don't remember, but my account history is correct. That should be all of last week's losses. What was the date last week? 9th, 10th, 11th were the losses. So 9th in here, 10th, 11th. So about 2,400 about, right? 2,000, or I guess 2,700. So the win from Monday puts up to about 2,000. We just need 700 more. That's gonna, looks like it's gonna go. So in one day, basically, all that week's loss is gone. So we had Thursday, right? Thursday was about 2 weeks ago. Thursday was profit of about 3R. all of last week, we had about a negative 2.5 R. I'm putting this in very simple terms, but I think 2.5 R, maybe. So yeah, negative 2.2 R, I guess. And now right here, we're basically back to where we were. So this is the benefit of risk management and taking good trades. Okay. All of last week's price action that I had taken losses on my actual account, I wasn't red, but for the demo, I was red for the week, which just kind of annoyed me. But it was my fault. I'm not gonna say it wasn't. It's just setups I probably shouldn't have been taking. But either way, 2 Thursdays ago, 3R, all of last week was less than the trade there. Right? This was 3 trades. This was one trade on Thursday. And now here again on Thursday, we have basically one trade. It's going to net us around the 3R that we're looking for all of last week. So you look at that and you're like, okay, you take one good trade, a whole week of price action doesn't affect it. Still in the profit. Then boom, you're back, one more trade, back up to where you were at the start. This is how risk management needs to be looked at. When you see it repeat over and over again, you don't have to worry about getting out of drawdown. You don't have to worry about how many wins it's going to take to get out of drawdown. You don't have to worry about, oh, it's going to take too long or whatever. All right. If you just focus on what's the job. The job is to take high quality setups. The job is to manage your risk. You're always going to be in drawdown. You're always going to be in profit, right? That's just how it is. Trading is, you're never going to just be in perfectly above. Right? You're not always going to just be every trade is a win, boom, 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 equity high, equity high, equity high. That's not how it works. It is your job is to manage drawdown as a trader. So when you take losses, when you take streaks of losses, although it may be out of the ordinary, maybe for you to take a string of losses, and for me taking 3 losses in a row on the demo account here, I don't think that's happened since we started it about a month ago or a month and a half ago, whatever. Hasn't happened. Variance still exists, right? I can still flip that coin 3 times and it may land heads 3 times, even if the coin is weighted. Now I do think that some of that, like the Friday trade of that week, the Wednesday trade was pretty good. Thursday trade was pretty good. Friday trade was still pretty good. But I think there was on Friday, I could have just simply sat out for the week. It was still a good setup. Still, someone I would take. But in hindsight, looking at it, I think mentally, I probably should have just taken a day off after losing those 2 days. And on Friday, there just wasn't any good setup anyways, or in that seek and destroy profile. So I'm still learning. I'm not a perfect trader. I'm not ICT or anything like that. I'm not a wizard. I can do decently well when price action is good. But that's all I need. Like on the setup I took off stream. I got it on 936. Didn't take a partial here. Maybe I did. Wait, let me look. Did I? Oh, I did take a partial. I took 20% off on that swing high. The other 75% got stopped out here. And then as it's leaving, buying in here, same thing on the other account, and then getting into here. Looking back at it, you may look at this, or I may look at this and with a negative mindset of, man, if only I didn't get stopped out there, I would have taken the low of the session up to the high of the day. But if we look at it like that, every single trade is going to be a missed trade. And there's always something that you could have, should have, would have done better. There's always going to be something that can be improved on. But looking at it in a negative mindset instead of being proud, I got an entry down here. I'm very proud of the 930 execution, even if it did come stop me back out in profit. And the fact that I waited for this move to come in, felt confident in still being a bias, taking partials where I need reasonable, I think, patiently waiting for the move. I'm still happy with the performance. And my job is to show up and make decisions. If the decision, you get paid off your decisions, you get paid off of managing your risk, and that's it. So I haven't been trading this demo account very aggressively. I've just been focusing on those easy, high quality setups. So that's why this account hasn't grown a whole lot over the past couple of weeks. I could trade it more aggressively if I wanted to, but this is really the only second trade I took throughout the week. There's a little tiny scalp I took on Monday, which I don't think I've shown you guys, but probably should. Where's Monday's PA? Right in here. Tiny, tiny scalp. Buying it up to that swing high and then stopped out on profit. So just a really tiny one, and then today is probably the only one I take for the week. Right in here. And then whatever happens after that is whatever, but had a question from yesterday's tape read. When you have a wick and a subsequent candles form an inefficiency, would you call it a true inefficiency? Would it seem? Yeah. That right there should be inefficient. I think that the wording you have there, I'm kind of confused on, but the picture alone, if you're just asking if that gap that you've marked out is inefficient, I would say yes. On that time frame, right? I would go back on a whatever time frame that is and cycle down to see if it's inefficient and all that. But that wick is inefficient. So if you draw that gap out to the left and you just have the wick there, it's more inefficient than if you had the candle bodies overlapping it. And obviously we don't place, just on the fact that it's inefficient doesn't mean anything. It's still just a PD ray. We're spotting that PD ray. So if the bias is bullish, that's going to be a true IFVG or potentially a balanced price range if it displaces through that perfectly, but more as an IFVG/FVG that we see respected. All right, so anyways, I'm going to put jam an alert up here. Probably see it go. I was asking if the wick followed by inefficiency make it inefficient. No. Yeah, that's why I say if you look at it on a lower time frame, then maybe. But I would see that as an inefficiency. I don't think it's too important if you misread it. I'd be more interested in that order block anyways, to be honest. You got an order block there that fills a gap, and now it's leaving and forming a gap right underneath. So I'm more interested in that high quality order block than the inefficiency, if that makes sense. But you're right. That would be that wick. You would want to study that. But if you're just looking at this as a 1 minute time frame, you say you don't have access to the 15-second chart. If this is a 1 minute time frame, I would use it as a gap all the time. Nice, another fractal market maker buy model in there within the -1 to -1.5 within what macro time? Value gap in here. All right, so yeah. Anyways, I'm just gonna leave these the limit orders up here. Screenshot this one last time before I forget. First limit filled. Waiting for the last, but turning the charts off. So, little review for, I guess, the end of it. Pretty happy with the price action. Definitely probably the easiest out of the entire week for me personally. What could I have done better? I think when I'm looking back at this, I noticed that on the 5-minute chart, get these executions off. On the 5-minute chart, you don't have displacement through the SysD. I should have seen that. So when we don't have displacement through the SysD, this isn't going to be a valid breaker, right? And actually, when we look at it, this entire range in here is the break. What the heck? This entire range is the breaker. So actually, it was holding it decently well. You know, we want to see it drop into these gaps. So the one thing that I may have messed up on in the tape read today was this. And obviously that creates the 1 minute kind of tape reading things. But Very simple fix I think I can improve on, and it didn't create disaster and distress. Just a little stop out in profit and then a re-entry later. But I want to get, that being said, I still want to get from here to here. That's what I want. Even from here to here, I'd be pretty good with that as well. And if I can get that once a week, that's my entire weekly goal. Sometimes it's my monthly goal in terms of R. If I can get it there, it's a really good one. Today, if I had gotten that entire range, I had entered in on 936. So the retracement leg at 936 here, as it's closed above the first presentation gap, and then you have the swing high in here, up to this swing high will be a 3.7 or so, maybe like 3.7/4. I don't really know where my entry was. Let's see, what was my entry at? Entry was at 23087.75. 23087.75. So 4.9 on that one. And then up to here would be a 6.4, 6.14 rather. So yeah, that'd be like a weekly target for some. But yeah, I think it's pretty clear we're gonna see that run out. Hopefully it doesn't tease us again. I'm not gonna sit and watch it. But now you have a new high in 11 o'clock. You got timed dynamics all playing out nicely. And that high and probably then some is likely to go here. So I'll leave the recording on to just capture the end of this, but I'll stop the stream. It's not much I'm going to tape read after this, so just look for higher prices, of course. Hopefully you learned something from today. I appreciate everyone who stuck around. And yeah, not too bad. Like I said, I'll be gone tomorrow and on Saturday, so no streams or tape reading or anything. No market reviews for those days either. Later today, we'll do a market review for today's price action. It may be around like 3 p.m. or 4 p.m. I'll try to make a quick one. I got 2 one-on-one calls today, and then I'm playing football later. So we'll see where we can fit it in. But yeah, got any questions? You DM me. I'll post a recording later today. I got to post the recordings from yesterday as well. So journal, do the things that are necessary to succeed as usual. And I'll talk to you guys soon. Peace. And here comes the target. Bang. So there's the whole stream trade. And we're done for the day.